It's about that time of day again. My name is Joseph. It's Wednesday evening, January 4th, 2017, and this is your nightly newsletter. We're covering crude oil, S&P, gold, euro, and FDAX this evening. Crude is bullish with a spike in channel, so we're watching for the correction zone tomorrow. The E-mini S&P is also bullish and trading with a wedge and a possible hidden spike in channel, looking for a correction as well on the S&P. Gold is bearish after the buyers tried twice and failed to retest today's highs. Just got to get through a key level of support on the gold tomorrow. And of course, the euro is bullish and trading just below today's high. So we're staying patient. If you're not in the move already on the euro, we got some patience tomorrow here, but we got some great opportunities if we can get a pullback on it. FDAX is also bullish and trying to break free of the flag pattern that we talked about in last night's newsletter. It's a little bit late in the flag right now, and so we're keeping an eye out for a possible failure on the FDAX. Boy, we got another great newsletter in store for you guys and gals tonight. We got plenty of tradable opportunities setting up for tomorrow. Before we jump into our charts, though, I do want to remind you the only place to watch the full-length version of this newsletter video is here in our blog at sidewaysmarkets.com. If you're on the YouTube channel right now, if you're watching the YouTube video, it's only a small portion of the entire newsletter video. There's a link in the description of the YouTube video. Follow that link and come join me on the blog at sidewaysmarkets.com for the full-length version of our nightly newsletter. Don't forget, while you're here, join the mailing list. I'll send you an email every evening before 8 p.m. Eastern Time when our nightly newsletter goes live. I'm also posting charts throughout the day on my Twitter and Facebook feeds. Don't forget to check me out on social media. Below the video tonight, you'll see a spot to download all the charts you see me using in tonight's video. Grab those charts and have them ready for your trading session tomorrow. And then please don't forget, grab your free pass. If you're not a student here at School of Trade, you're going to learn more with me in 90 minutes on that free pass than you will anywhere else on the interwebs. Grab that free pass in the upper right-hand corner and come join the trade room as a guest. If you're brand new here to SOT, we got a great frequently asked questions page to learn the who, what, where, when, and why. And you know me. We were around all the time to answer all your questions 24/7, 365. Use that live support button on the right side of the website and holler at me if you got any questions. It's been a fantastic year of 2017 so far. We've had a great couple days in our trade room. I look forward to trading with you as a beginner, intermediate, or advanced member here at School of Trade. Before we talk any more about that, though, let's jump right in and take a look at the calendar here for tomorrow. We got quite a bit of news here. Now, don't forget, a couple key things to keep in mind. The markets were closed on Monday, at least they were here in the U.S., right, because of the New Year's kind of being observed right, on Monday. So with that Monday holiday, the inventory report that's usually on Wednesday is pushed back till tomorrow. And also, I want to remind you, we're looking at non-farm payroll Friday coming later in the week. So Monday's holiday is pushing things back. Usually Thursday becomes a day where a lot of extra news events get slated. And of course, again, we've got the employment number coming on Friday. Let's dig in here right now. What do we have coming out tonight? We got some major news from our friends in Asia. We're going to hear from China and Japan tonight. The big news tonight, though, will be the General Services PMI at 8:45 p.m. If you're trading in the overnight Asian session or early parts of London tomorrow, please be aware we do have news from China overnight. It's always going to be a big market mover to keep an eye on. As we go into tomorrow morning, Thursday, January the 5th, we got a little bit of news here coming out of Europe. Really nothing major here, 3:15 and 4:30 a.m. I'm not going to worry too much about those news reports tomorrow. The big report tomorrow will be, of course, the jobless claims report at 8:30 a.m. And of course, as we scroll down, all the way down here, don't forget about the inventory report at 11 a.m. Eastern Time. This is the big news tomorrow, 11 a.m. Eastern Time. Inventories are usually weekly reports on Wednesdays at 10:30, but because Monday was a holiday, it's pushed back to Thursday at 11 o'clock. If you watch the newsletter every week here with me, you've probably heard me say this before. I really wish they would just leave this report at 11 o'clock on Thursdays. It's really much easier because it gives us the entire morning session, almost the entire morning session, to participate. Now, keep in mind, this is a big news report, and it's not just for crude oil these days. Everybody's watching crude prices, right? So we're expecting to see a reaction throughout the E-minis, possibly a bit, right, in the currencies and the metals. But really what you want to be thinking tomorrow is, is trading around this news report if you're a crude trader, and really don't be surprised if you see a reaction on the S&P 500 or any of the E-minis, of course, right, tomorrow. I like to give this news report, the inventory report, a 15-minute buffer. That means 15 minutes before I'm sitting on hands until 15 minutes after. Keep in mind, it's towards the end of the morning, so our goal tomorrow be to get those trades taken before 10:45. That way we don't have to worry about trading into lunch after the inventory report comes out. Now don't forget, we're going to do all of this together tomorrow morning in real time with all of our traders in the trade room, opening up at 8 o'clock Eastern time. So come out and join me. You don't need to do all this on your own. Again, talked about this earlier. Friday morning is the employment number, right? Heads up on that. That tells us that the end of the day tomorrow is likely going to be a little bit slower than we normally see. So heads up on that. Big news on Friday, and this really is big news, right? This is not your average Red Star news event. This is a significant market moving event, 8:30 a.m. on Friday, January the 6th. So be aware of that. Friday morning's news tells us to expect an early slowdown on Thursday afternoon, so keep that in mind. I'm also expecting a little bit of a first week back hangover tomorrow afternoon. I wouldn't be surprised if traders get out of the office a little bit early because, of course, it's being the first week back after many of us took a few weeks off right at the end of the year. So I have a feeling I'm not the only one that's going to be looking forward to the weekend, right, to get that sleep schedule back on track once again. So early in, early out tomorrow morning ahead of the inventory report at 11 o'clock Eastern time. Don't forget to watch the volume tomorrow afternoon as we have that kind of hangover ahead of the employment number on Friday morning. We'll talk more about that obviously in tomorrow night's newsletter. So make sure you tune in tomorrow evening, same time, same place. Let's jump right in. We got crude, S&P, gold, euro, and we're going to finish up on the FDAX this evening. Crude is bullish with a spike in channel this evening, which tells me to be looking for buying opportunities at support levels around the correction zone tomorrow. The ideal scenario for the buyers is to see a deep pullback below the low of the channel and then look for seller failures for a move going back to retest the high and possibly that API news target listed overhead. Sellers need to be careful tomorrow because this move higher happened late in the session today, which tells us there may not be that many buyers that were able to get into this move, and those buyers will be waiting patiently for a chance to quote-unquote buy low rather than chasing this move and buy high. Don't forget, the weekly inventory report was pushed back until tomorrow at 11 a.m. Eastern time, and as I said earlier, my plan is to avoid trading during that time tomorrow. I think really the two big clues right now on this chart are going to be the trading range, right? The day started off inside of a trading range, had a great session today, relatively slow as you saw, but still a great session buying the low, selling the high of that trading range. Anytime we have a trading range on the chart, we always know it can act as a magnet. So if for some reason this market was to collapse here tomorrow, right, look for that trading range to become a price magnet. Now there's also a trading range all the way, keep going, there we go. This is yesterday's trading range that we talked about in last night's newsletter. Tomorrow's an inventory day, right? So anything can really happen when that number comes out. So if we do happen to see kind of a runaway bull market here tomorrow, late in the morning, keep an eye on that trading range just below that $55 a barrel area at 54.83. Obviously, with that news pending tomorrow at 11 o'clock Eastern time, we'll have to wait and see what the market wants to give us. So keep an eye on those two trading ranges. The trading range above becomes a great runaway target for buyers. The range below, right, if the buyers fail and we collapse back under its own weight. Now, second big clue here is the spike in channel. And the spike in channel really gives us the actionable information. You're going to hear me say this quite a bit as a student, as a client, or as a participant in our nightly newsletter. Being successful in anything, whether it be day trading or any other business, is all about finding the actionable information. There's so much information available these days. I have instant real-time data. I can Google search anything, right? And with that comes the challenge of knowing what's important. That's why I say this is actionable information. I could clutter up this chart with millions of different support and resistance levels, and you'd be paralyzed not knowing what to do with the information. This is actionable information, which means we have a recent spike up. That spike up, this is always the key to defining a spike in channel. We see a spike up, a pullback, and a new high. Once you see that new high, then you can draw the trend line at the high, bring it down to the low. Oh, sorry about that, wrong direction. Bring it down to the low, and you'll notice, right, the buyers bought off the low. Love spike in channels, but the one thing a spike in channel tells me is to look for a deep pullback. Look for a correction so I can buy it going back up to retest that high, right? If we pull back here, keep in mind, right, the objective will be to get back to retest that high. From there, it'll be the measured move. And of course, from there, we did see the API report tonight at 4:30 p.m. And of course, you get a target waiting overhead at 53.77. And again, I talked about that big range, right? That big range target waiting up above. So whenever I see a bull spike in channel, that tells me this strong spike higher tells me everybody's aware the buyers are in control. And when everyone's aware, nobody's getting caught off guard, the only way to attract more buyers is going to be to pull back, right? So I'm looking for a pullback down into the correction zone to then be able to buy on the way back up to retest that high. And usually what this stuff will look like is it will usually look something like this, right? Nice deep correction. The sellers may get a chance here to scalp on the way down, right? But as soon as it attracts enough buyers, right, that's when you want to start looking for this opportunity here, seller failure, breakout pullback, right, to buy it as it comes back up. So would love to see a nice deep pullback down to that 53, 52.80, 52.75 area. We've got a lot of support levels waiting down here. Just remember, right, as a seller, you're going to have a couple scalp opportunities as this price goes lower. But in a bull market like this, a bull market that broke late in the session, remember, crude's not a full day market, right? 2:30 Eastern time, this market's done. So this move was late in the morning here, or late in the session today, which means after coming out of a range-bound market, there are likely a lot of buyers that simply missed the move or chose not to participate in the move, and now they're going to try, right, to get in on a deep pullback. Now, if we go higher here right now, be careful. This is always a challenge. We have a measured move. This is actually what we call a triple measured move, waiting overhead, triple measured move there at 53.22. If we go higher, right, be careful buying into that measured move. And I tell this to my students all day long in the trade room. When we get to a measured move, you want to be thinking profit taking, and we want to be thinking about a correction lower, right, so I can buy that dip. That's the move you want to look for if we do just run, right? If we don't get a nice pullback for us to buy, if we just run up to that measured move, wait for it, don't buy into the target, and then look to buy the trap low. What's going to happen is it's going to, as it pulls back, sellers will start thinking it's a reversal, right? And of course, when they fail, that will give you a chance here now to buy into the failure of those sellers. So if it does go higher here, obviously we want to participate, but I don't want to buy into that measured move. So look for the double top, correct low, and then right back up to retest those highs. I'm always anticipating a bit of a trading range to form around that measured move because the measured move is a target where we expect buyers to take profit. Price will pull back enough to attract more buyers in, and that's what we're waiting here, right, to buy to finish off the move. Obviously, we know the most reliable trade here will be buying on the deep pullback, but again, tomorrow's a news day, so we'll see what we get. We're ready for no matter what happens either way. Looking forward here right now from crude to the S&P, another bull market here. The E-mini S&P is bullish and trading with a wedge and a hidden, quote-unquote, hidden spike in channel this evening, which tells me to be looking for buying opportunities after a deep pullback to the low of the channel or in the correction zone waiting below. If price rises without a correction, then I need to be careful buying into that double up resistance at 66 and wait for a successful breakout pullback up to the measured move and prior highs waiting as targets below or targets above tomorrow. Now, don't forget, that weekly inventory report is tomorrow at 11 a.m. Eastern time. I realize this is the S&P, but remember, all eyes and ears have been focused on the